Hello, chart watchers and DecisionPoint faithful. Welcome to this Monday, October 14th, 2019 edition of DecisionPoint with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, I welcome you to the show. And for our regulars, those DP faithful, welcome back. All right, well, we got a pretty jam-packed show, but I think before we get into the agenda, I would like to bring in my dad, Carl, and what are you thinking about what's going on with the market and this rally right now?
Well, it's the last 2 days have really been affected by the trade talks with China. And do you have that? Do you have a S&P 500 chart?
I do. Oop.
About a 6-month candle.
Where did I stick it? I do.
Somewhere.
I know I do. I must have.
We looked at it earlier.
Yeah, we just looked at it. I know. Oh man.
Okay, well, just
I can pull up one really quick here. We'll just make it. We'll make one really fast. 6 months candles. There we go.
Anyway, the news on Friday morning was big success with the China trade talks, and we're going to do it in phases now. And phase one is just almost done, and all we have to do is sign the papers, and that'll take about 4 or 5 weeks. And so we had a huge rally. You notice that the bar on Friday was really a shooting star. I'm not sure, taking it in this particular context, I want to lay heavily on that being a hugely bearish short-term sign, but that's the way I interpret. I do interpret it as being bearish because people kind of lost their enthusiasm towards the end of the session. And then today we wake up and the Chinese are saying, no, we need another round of talks before we have a
real deal
ready to sign. And I thought, yeah, this is just back to the old China stall. And just what on Friday when I had to write the recap, I didn't get too negative. I just stayed neutral on it because I was afraid it would sound like sour grapes to be down on the particular move. But as it turns out, it's about what I expected. And so I'm going to go back to the position on these talks, and this is looking into the future, which I do so well, and say that they're going to stall until after the election.
Right. I've been suspecting the same as well.
Yeah, I just think that's just the way it's going to work, and don't get too optimistic about it. As far as my ability to see the future, I remember when they first started carrying bottled water in the grocery store, and I said, "This is the dumbest idea I have ever heard, ever seen." Selling water in a country where you can get drinkable water out of virtually every tap in the country. I was wrong about that, wasn't I?
Yeah, I'm afraid so. Well, I have to say I agree with you. The fact even today, we got those intraday highs, but we couldn't close anywhere near them. 2 days of that and this possible island now. I mean, I'm staying in the neutral to bearish camp as well. So, we'll go over those indicators and such in just a moment, and then you'll really, I think, have a better feel for what we're looking at. So let me go ahead and I'm going to move it back to our agenda here. So we will look at that price relative. I'm going to go over the global markets very briefly. Broad market indexes, we'll look at the DP scoreboard indexes. I'll give you a sentiment update, but I'm going to do my DP indicators first. And then as a bonus, I know you're going to be showing us that gold and silver cross, those indexes that we now have available, I'm guessing. and your grab bag. So I know you have a few interesting charts to show that you've been watching and thinking about too. So anyway, let's go ahead and look at that scoreboard. You can see we've had a lot of new signals come in, and in fact today we had 4 on our short-term trend model. These are 5-day, 20-day positive EMA crossovers. We don't use these necessarily as a trading type of signal. We don't really track these, but I think it's interesting just to note, that the trend did flip based on that trading we saw Friday and today. But the interesting one I thought was the NASDAQ 100, because it did pull out a PMO buy signal. All of the other indexes have PMOs that are rising, but they still have a little bit of margin to cover before they can get to that same crossover. So the NASDAQ 100 is, picking up a little steam. We didn't have any changes since Friday. I think we were talking about it, but we're still looking at the sectors being quite weak, with the exception of those, a lot of these defensive areas. But technology is on a buy signal, and that to me is, just par for the course when you look at that NASDAQ 100 starting to pick up a little bit of relative strength there. The other one is financials. That's sort of a middle of the road sector in my opinion, but it probably has something to do with those trade talks going on. Just my guess. All right, so let's look at a few of these charts. There's that one we started with here. I'm going to just move right on into the price relative chart here. And I think it's very clear that the NASDAQ 100 and even the OEX, those really large cap companies, seem to be carrying the load right now. As far as relative strength goes, they're performing better. You can see we had just started to make some headway here for the mid caps and the small caps, but no longer. We're continuing in a declining trend and getting ready to test those relative lows once again. All right, so here's just a list of the broad market indexes that we look at, and this is the SPY up here. And again, I'm concerned when I look at it as an island, and then again, we were talking about those closes being near the bottom of the trading range for the days. You can see that S&P 400, S&P 600 are still pretty much languishing in a trading channel and have not been able to get anywhere near their all-time highs, whereas of course the S&P 500, the Dow, the NASDAQ, they've all managed to get up and get above their all-time highs. So just making note of that. Global markets, just in general, you can take a peek at this. Still lots of declining trends. Shanghai is still, that's the bottom there. Let me get I had my cursor and now it's gone. Anyway, you'll note on the Shanghai index that we're seeing that rally coming off of probably these trade talks, but it's still in a declining trend as far as their market goes. So I have completely lost my cursor. I mean, seriously, like it's nowhere to be found here. Come back. There we go. There it is. Okay, great. All right, let's continue on. All right, here's the Dow. And again, all of these look pretty similar. I think the interesting thing is most of them bounced up above those tops we saw back in April and May. But overall, the main interesting fact, I would say, is we broke from this declining trend we were having here, but ultimately we're coming right back down toward that declining trend. And the island idea is still a concern. And then notice that the OBV, we're still in that declining trend as well with the volume, even though we managed to pick up some here on the last couple trading days for the Dow. And then here you go, NASDAQ 100 performing better and actually has gotten a PMO buy signal at this point, but the volume pattern on the OBV still concerns me. I don't like it. I don't think it's supporting this. OEX, pretty much the same as the NASDAQ 100 and still showing those declining OBV numbers, which are not good. And of course, here is the S&P 500 chart. I'm still paying attention to what could be a very large double top formation. We did come down and we didn't quite get to that confirmation line for a double top. We may end up coming up here and looking at a triple top. But I have to say, just in the back of my mind for the bulls out there, I think you could also make a case right here. This is your flat, top of a possible ascending triangle. And so there is that possibility of that breakout, but I'm just not convinced yet. So,
Erin,
yes.
on the OBV, let me just clarify. It's really confirming the price trend in the last couple of weeks. So when it confirms, it's pretty much. I mean, it's not telling you anything. It's just saying, okay, I agree with the price movement. But you notice that the top in July and the top in September get a higher top in September, which is a reverse divergence, and that's bearish.
Yep, absolutely. So, I mean, there's some things you can, if you're a bull, you can sort of hold on to here, but I'm just not too comfortable. And really in the short term, because of I guess, somewhat of a comfort level among the investors, we're starting to see the VIX numbers get lower, which means on the inverse scale, they're getting to the top Bollinger Band. And typically that is when you start looking for a decline. We're not quite there yet. So we maybe can look for another day, another day or another move to the upside or some consolidation. But ultimately, I'm still not convinced. The short-term indicators are starting to look a little better here. They did make quite the jump after the, this rally that we have had coming out of that October low. They still could accommodate more upside. So they're looking good as far as the short term goes. And, the intermediate term indicators are finally turning, but they have not had those positive crossovers. And I prefer to wait for them. You can see that you get faked out quite a bit here. So we need to really get that positive crossover before I could get intermediate term bullish. All right, I'm going to look at just a few sentiment indicators and I'm going to pass it over to you. So as far as the put-call ratios go, I invert the scales. And so the lower part is oversold, and we're starting to see a rise coming out of oversold. And that generally, as far as sentiment goes, is positive for the market. So we could see a little bit more on the way of upside. But again, sentiment is really, it's interesting, but not necessarily a predictor or even a confirmation. I don't know how you feel about it, Dad. So
I'm not really tuned in with sentiment right now.
Yeah, exactly. And people are, you can see on the AAII, the American Association of Individual Investors, that they are showing a lot more bearish activity. And we do have a pretty low bull bear ratio going on right now, at least as of last Friday. So we're seeing a lot of bearishness. Typically, sentiment is contrarian. So it's generally a good thing when we start to see those very low readings. But again, I wouldn't be betting on it.
Remember that the cutoff for the AAII is on
Thursday
Wednesday
of last week.
Well, it's Wednesday is the cutoff. That's the last reading they take. And then so it's at midweek. And by the end of the week, people were probably a lot more bullish.
Yeah, it gets, and yeah, so this data can get kind of stale. As far as the active investment managers, they're still a little tentative here, kind of middle of the road as far as their exposure. So I would look at that as mostly neutral. Wall Street sentiment, this one, the data does come in as of Friday. This is the market timers. We give them our feelings, our sentiment as far as what the close will be at the end of the following week. And interestingly, we did have a lot of bulls this time around looking for a positive close on the end of the week, and look at quite the ratio even. But we've seen much higher here. But and typically when these come in, you're going to see a bit of a price rise out of it. But I found that really interesting to see that really big shift in the sentiment going into this week. But after Friday's rally, it was probably hard to be bearish when you see that going into the week. All right, so this is the RIDEX assets. This tells us kind of where the money is going, not necessarily how people are feeling. And as I remarked last week, and it seems to be in a continuation, is that we're seeing a lot of movement into cash and not into the market. And, you know, not even on the, you know, short side. We're not seeing a huge amount of bears coming in either. You can see at the start of last week into this week right now, you've got definitely some lows going on there as far as the move out of the bear funds, and it's pretty obvious the moving out of the equity. And then I'm just going to show you my gold chart, and then I'm going to pass it over. And mainly I show the gold chart so we can look at the sentiment for gold, since this is a sentiment report. And it has risen, the discounts have risen. And so again, contrarian sentiment, if people are feeling bearish on gold, which a high discount would imply, then you start to look for, you know, a move to the upside. I was looking at a head and shoulders, it activated, but then never really amounted to anything, and we got right back up, and now we're really looking at a consolidation zone. I also think you can make a case for a bull flag, and honestly I like this declining PMO. We didn't lose too much out of price. We're still kind of in that trading zone, and now we have a PMO that's really not in overbought territory. So I think that is a positive for gold. And that's what I have. What do you want to look at? I know, like I said, we've just put together those gold and silver cross index charts.
Let me just comment on gold since it's still up there. Mm-hmm. The something in the background, and we can't follow it at this point, but it's the I can't think what it's called now. The commercials are very heavily short, and the commercials are usually the ones that are right.
Mm-hmm. Yeah.
So, and Larry Williams covered this in his show, last show, and Tom McClellan's been covering it in his letter, and it's kind of hard to go against them. The only positive thing you could say is they don't always get everything right. And they could be wrong this time, and the short covering could really send gold through the roof.
Right.
But
exactly.
But that's a pretty optimistic view of it.
Yeah, I know on Wednesday I was definitely, when I made this chart, was feeling quite bullish because we go to that kitco.com, and really the rise in gold is more due to buyers rather than just the change in the dollar. So I think that's kind of positive, though.
Okay.
Mm-hmm.
Let me take a look at the SPY chart, and I wanted to point out the volume. It hasn't updated. Yeah, it has updated. I just need to update it. Okay. There, you notice the very low volume today. Of course, that would fall in line with a consolidation. At least it didn't fall out of the sky. You got to give it that much credit. The volume, we did mention this before, it was kind of thin on Friday, I thought, just with this kind of a move. But if it had been too high, I'd have called it a blow off. So it wasn't quite as full-bodied as I would have liked to have seen. Let me get to... Okay, the interest rate chart. I think we're still waiting for the update for today. Yes, we are. But what really is important, we've got a double bottom on there. And I don't think it's a precursor to something, a really big move. That maybe the best we could hope for is they'll move sideways. for a while in this range that they're in. But I don't. They don't have a beat on the interest rate situation with the Fed the end of this month yet. They're not signaling one way or the other as far as I've been able to tell. I'm trying to find my no, that's
I know, see?
okay. Here we go. Oh God.
All right, I took the screen. Go ahead.
You got it? Let me go back and pick the screen. Sometimes it just doesn't do what you want it to do.
I know. Like I said, that I never have a problem with my cursor not showing up until I do this show.
When
Seriously.
it disappears, move it real fast, close together like that, and that usually brings it up for me, by the way.
Okay.
Okay, moving back along here, we have the interest rate chart, and I guess I'll just have to go this way with it. I keep showing this. There's not much has changed, but I keep thinking of things that about, making the point that it's different this time. It's always different. It's been different. This is my full adult life here. I was thinking today how different it was when I was about 13 years old. We used to get savings bond books, and you go and to the post office and you buy stamps for 10 cents and put them in that book. And when you got 187 of them, $18.70, you could turn it in and get a $25 savings bond.
Mm.
Yeah. So then back at that time, it was interest rates were about 3%, which, set a standard in my mind.
Mm-hmm.
That that's what they ought to be today, at least, the short-term savings rate. But I have changed the chart. I put in the New York Stock Exchange composite because it made its all-time high back beginning of 2018. I think that's more typical of the broad market. What's a stock that I was playing with today? Where is that? Technology. Here we have technology making close to all-time highs, but notice that the bullish percent index is at 47%. So it's over 50% off of the possible, it's up 100%, which is it'll be a lot closer to that today. Mm-hmm. You mentioned, if I'll just diverge here a little bit, you mentioned the gold and silver cross indexes. We do have more coming on more indexes and sectors, but that's going to be released at a later date to be announced. So back to this subject, notice the relative strength since the beginning of the year. The smaller cap stocks have been dropping in strength. This is the relative strength between XLK and RYT, which RYT is the equal weighted version of the XLK. And those are weaker. So we've got weak bullish percent, and yet we're approaching new highs. This is just not a good situation. Now, if the Chinese trade talks had gone well, maybe that that would have made the difference, and we could definitely look for new highs, but I don't see it. And you notice how the percent of stocks above their 20 EMA dropped pretty precipitously here, got down in the close to zero, and we've rallied out of that. That hasn't updated yet. This too early in the day for this to have updated, and it'll be up here. But once again, it gets up in this area, then it's overbought on a short-term basis.
Yeah, it's moving that direction quickly.
Right. Okay. Okay, that's what I was looking for. The gold and silver cross indexes. They're looking not particularly great, considering the market is near all-time highs. And yet here we have, it's just about 50% of the stocks in the S&P 500 have a 20 EMA above the 50 AMA. And here the golden cross is down. It moves much more slowly, so it's not totally blown out like it was here, but it's well off its potential high. And, look at the BPI on the broad market indexes. Notice that declining tops on the BPI, while this market is making or close to all-time highs. That's not good. Mm-hmm. Same with the NASDAQ composite, declining tops. And again, here the NASDAQ composite is reading 45%, well off of potential of a 100%. New York Stock Exchange composite just slightly better, and still weak. This is not a good setup. To me, it's not a good setup for a monster rally, which so many people seem to be looking for.
Or wanting.
Right. Hoping for.
Hoping for.
Oh yeah, the short-term indicators. I've added these along with the STO, B, and V. I've added the stocks greater than their 20 and percent PMO rising. And these are more direct readings of the index, and better, well, let's say not better, but helps confirm what the others might be reading. Or in the case of here, it was kind of fuzzy what the heck was going on with the STOs, but these were down near zero. So that was helping us say, well, the STOs were oversold for their particular situation there.
All right. I know it's hard to believe, but it's time. We'll all say goodbye right now. I would love to get your comments and feedback if you could take that survey. And I hope you will join us next Monday at 3 p.m. Eastern.